Right now in Tulsa, there are two houses sitting on the same street, same size, same price range. One sells almost immediately, the other sits for months with price cuts and no real activity. And it's not because of interest rates, and it's not because of the market is slow. It's because Tulsa is operating as two completely different housing markets at the same time. And if you don't understand which side of the split you're on, you can lose a lot of money as a seller or miss a big opportunity as a buyer. So let's break this down. Think about it from your perspective. You're trying to sell your house. Your neighbor is also trying to sell their house. On paper, these homes looked almost identical, but in reality, they're living in two completely different lanes. Let's call them Lane A and Lane B. Lane A is what I'm going to call effortless homes. These are homes that have been well maintained. They've been updated gradually over time, not all at once out of panic. The sellers understand today's market and price the home appropriately. They're modern enough, the finishes make sense, the marketing is done correctly, the photos are strong. When buyers see these homes online, their reaction is simple. Man, that's a really nice house. I want to see that one in person. In Tulsa, these homes are still selling relatively fast. We're talking 1 to 2 months on average, in some cases even faster. I've seen multiple offers on these homes, and in certain situations, they're even selling at or slightly above asking price if they're priced aggressively day one. All right, now let's talk about Lane B. These are what I call friction homes. These are homes that are dated, old carpet, popcorn ceilings, Formica countertops. They need work, and not just cosmetic work. There are all these little things that buyers walk through and immediately think, I don't want to deal with this right now. And these homes are sitting on the market for 3 months or more. They get price cut after price cut, and quite frankly, they end up selling for a lot less than they could have if a few things were done differently from the start. The important thing to understand is that this split is relatively new. This really started happening in the last 3 to 4 years, and a lot of sellers don't know how to deal with it yet. Buyers right now are in the driver's seat. As a seller, you no longer have the luxury of pricing your house wherever you want and expecting the market to figure it out. You need to price it correctly, and in many cases, you need to price it slightly better than you think you should just to make sure it sells. And the data supports this. We've seen this split widen over the last few years, which brings us to the big question: what caused this change? Now, quick note before we go further, if you're new here, I'm Tom Ostasic, known online as Tulsa Tom. I live and work in Tulsa, and I help people buy and sell real estate all over the Tulsa area. If you're thinking about moving here in the next 2 days or 2 years, or selling now or later, all my contact information is in the description below. I'm happy to help. Well, as much as I love making YouTube videos for you guys, I still got to do realtor stuff. So I'm here for an inspection, and I'm going to finish the video in here. Now, a lot of people assume that the shift happened because of interest rates. And yes, interest rates play a role. They're not the main reason this split exists. Rates have moved up and down. We've even seen periods recently where the rates dropped to multi-year lows. And yet, they didn't suddenly bring buyers flooding back into every segment of the market. What we're seeing instead is a fundamental change in the buyer behavior. Today's buyer is very different than the buyer from 5 to 10 years ago. They are far more payment sensitive. Affordability has been stretched. Lifestyles have changed. Most buyers do not want to deal with renovations after just spending a large amount of money to buy a home. They don't want 6 to 12 months of projects, especially when they're trying to rebuild savings. They're seeing new construction everywhere. They're seeing high-end finishes on social media. They're watching home tours on YouTube. And that changes expectations. 10 or 15 years ago, buyers would say, as long as it's in the right area, we'll fix it up. That mindset has shifted. Now it's, we want something that's ready. We want to move in and be happy right away. Buyers are also more informed than ever. They're on Zillow, Redfin, Realtor.com. They're watching 3D tours, high quality video walkthroughs. They're building checklists months before they ever make a move. Many buyers are looking for 3 to 6 months ahead. They're willing to make the right decision instead of a fast one. That patience has led to longer days on market for the wrong homes. Here's some data that helps explain why fixer-upper homes are struggling. Recent studies show that homeowners in fixer-upper properties spend thousands of dollars per year just on maintenance and basic updates. A significant percentage spend far more than just annually. Buyers see that and think, I'd rather buy a home that's already updated and spend money improving it by choice, not by necessity. Another study shows that a majority of recent buyers are choosing move-in ready homes over homes that need work, even minor work. That's the effortless experience versus the friction experience. Now let's talk about pricing data, because this is where it gets interesting. You'll often see two numbers reported, median price and average price. And in Tulsa, those two numbers are both up 6 to 8% respectively. The data tells us lower priced, dated homes are being discounted repeatedly until they sell, pulling the median down. Meanwhile, higher quality homes are still selling closer to their asking price, keeping the average steady. Days on market tells us the same story. Overall days on market might look balanced at a glance, but when you break it down, friction homes are sitting 90, 120, and even 200 plus days on the market. Effortless homes are still moving quickly. Inventory is also higher year over year, which technically points to a more balanced market. But functionally, this feels more like a buyer's market because of the type of inventory available. Good homes sell fast, everything else piles up. This is two markets operating at the same time. So if you're selling, here's what matters. First, condition. If your home needs work and you're not pricing it accordingly, it's going to sit. Second, price it realistically from day one. Pricing high with expectation of dropping later almost always backfires. And third, marketing matters more than ever. Photos, video, presentation. Buyers form opinions online before they ever walk through the door. Fourth, be ready to move quickly. In many cases, the best offer comes early. Waiting can cost far more than negotiating reasonably upfront. Now for buyers, if you're shopping fixer-uppers, you have leverage. You have time. You have options. If you're shopping turnkey homes in great areas, you need to be prepared to act. That means financing ready, priorities clear, and understanding that great homes don't sit. The rule is simple. If your home isn't better than the competition, it has to be priced better than the competition. Understanding which side of the split you're on is the difference between selling in weeks or sitting for months. If you're thinking about buying or selling in Tulsa and want help figuring that out, reach out. I'm happy to walk through the situation with you. Once again, my name's Tom Ostasic, known online as Tulsa Tom, and I make these videos to help both buy and sell in the Tulsa market. If you're thinking about buying or selling, it doesn't matter if it's this week, next month, or next year, I'm happy to help. Reach out. All my information's in the description below. Thanks for checking out this video. We'll catch you on the next one.